Hey, everybody. Before we get going on today's podcast, want to remind you that the registration is open for the AgView Executive Business Conference held in Phoenix, Arizona this year, January 21st through the 24th. Go on to the AgView Solutions website, agviewsolutions.com, and click on to the conference tab, and you'll be able to go in there and look at all of the great things we have planned for this year's conference. A ton of great educators that'll be there. And so go in and check it out. We look forward to seeing you at the conference this year. Thanks. Welcome, everybody, to another episode of the AgView Pitch. We are heading into a new marketing week. It's going to be the 6th through the 10th of some more price discovery on the crop insurance side of things in the first full week of October. And we are lucky enough to have with us today Chad Hart, Iowa State University. How's it going, Chad?
Oh, doing well today. Hope you can say the
Um,
same.
yeah, I'm doing really good. We're hot and heavy in harvest, but I was telling you before we started, we got to talk about the most important stuff, which is Iowa State football. And I don't want to jinx anything, so I'm knocking on wood as we sit here. But my family, we've got like 5 kids down there now, so I'm becoming a professional tailgater. I'm figuring out how to do that part, and thinking that's as much fun or maybe a little more fun than harvest. And boy, they've been knocking it out of the park, so to say, so to
Well,
speak.
that's the deal. We've been on a heck of a run, 5-0, second year in a row. It's a really good feeling. It'd be interesting this the upcoming game here, Cincinnati. Will be a little bit of a challenge because actually, one of our former coaches is their defensive coordinator, so he sort of knows our system. But at the same time, too, the idea is we should have the advantage in that. You know, we still got John Haycock here devising the defense. The offense looks really good. That's what we saw against Arizona. They came out and really had a great game
Yeah.
as we look there. So yeah, I'm looking forward to 6-0.
Yeah, I hope so. And people will be listening to this on Sunday. We're recording on Friday, and so hopefully it is 6-0 when you're listening to this. So
Yep.
yeah, it's awesome. So I guess we better get down to business too. Last week, man, we kicked off a firestorm. Storm. I had Joe Vaklovic on, and I don't know. We talked about tariffs and some of the Trump potential payments, and there's a lot of emotion involved there. And I think it's interesting because whatever's going to happen there is probably going to happen with this administration, and the Chinese doesn't seem like they're going to be buying anything. Is there anything, any perspective you want to give us? It seems like whenever you even start talking about this stuff, it lights fires underneath everybody. But I think we still got to touch on it because, it does have an impact on the market. Any perspective from your vantage point that you think's worthy of discussion?
Well, that's the deal. I think as we're looking at, especially for the soybean market, we're caught between a rock and a hard place here. The
Yeah.
idea is, with the tariffs, going back and forth between the two markets, China has definitely moved to not only not buy from us, but have found openings. We knew Brazil would be selling to them. The
Mhm.
wild card here is what happened with Argentina and just sort of the confluence of events there that
Right.
that led to I've heard up to 35 cargoes being purchased out of Argentina headed to China.
Mhm.
You figure with that many beans moving out of South America at this time of year, that likely closes the window for export sales until sometime early 2026. But we also know that, the Brazilian harvest will start up late January. So that really narrowed the potential window we might have for trying to rebuild if even if we can, even if we were to reach some sort of agreement. You're probably talking about we've got a 4 to 5 week window would be all it would be to get beans into China before Brazil
Mhm.
sort of overwhelms the market again. So that's just, if you will, too little, too late.
Yeah.
And so that's why there has been a lot of discussion about providing some sort of payment here. Secretary Besson mentioned we'll have details on Tuesday. I look forward to seeing what those details are. But yeah, they're not going to fix the problem that we've got, but they can create a band-aid, if you will, to at least support the industry financially in the short period of time to hopefully where we do get firm agreements and can move forward
Mm.
productively
Yeah.
in
Yeah.
several months.
Yeah. It's
But
definitely
that,
a, well, go ahead.
well, I was going to say, because that's going to be the challenge here. As far as fixing anything for right now, that's just not in the cards.
Mm-hmm.
So that's what I see this potential program doing is it's providing the financial support because we know the market will not be able to react. There won't be an agreement in time to really make a difference for this marketing year.
I think that's where some of the consternation is. Just reading some of the comments in last week's, I think the consumer side of it, maybe not understanding the whole picture, um, whether it's right or wrong. I mean, the whole idea for the industry is, or for the government, is to try to create cheap food or affordable food, and there's different ways to do it. And I think part of the challenge, though, I think that really ends up being an issue is the farmer, at least in the data that we look at. And I kind of want your opinion on it, or if you have an opinion, it seems like that money that goes to the farmer, let's say it's a buck a bushel or $2 a bushel or something on soy, whatever the number is, it really doesn't matter. But what I'm getting at is it seems like it takes about 6 months to a year for a big chunk of that to flow through the farmer's hand into the rest of the industry, whether it's landowners or equipment companies or whatever. And so, like you said, I think it's a short-term solution for a longer-term problem.
Yeah. I see this as I describe it as it's shoring up our cash flow
Mm-hmm.
for the short term right now.
Mm-hmm.
But it's not fixing any of the long-term problems here. And you're right. The idea is that, you know, I think you said it well that this passes through the farmer.
Pass.
Any support
Yeah.
we're going to provide here, it's going to work through the farmer to a variety of places. It's
Mm-hmm.
going back to make sure that we're paying the lender back for the operating notes we're taking. It's going to the equipment manufacturers, to the seed companies, because the idea that if you're a farmer, the idea is you're constantly seeing money flow both in and out.
Mm-hmm.
And
Well, and
actually, that flow out is more consistent than the flow in. And so,
yeah.
this is, what the administration is talking about is trying to make sure that we do at least have some cash flowing in at a time when we know farmers have expenses, especially as we're looking forward into what we're going to plant next year.
Mm-hmm. Yeah, for sure. No, it's a difficult and not a fun topic, even for the farmers. We don't want it either. We'd rather have a market if we had
Hmm.
get our choice. But we don't really have that choice right now. And people can say, well, the farmers voted for this or whatever. But I still think, a lot of this, there's more to it than just the tariffs, too. I mean, the
There
supply
is.
and the weather's been good everywhere. It's easy to throw something at a target and call it one thing is the issue. But typically, when you have an issue, there's always multiple
Right.
things within the equation that creates an issue. And so I think it's more complicated than simplistically saying it's this or it's this.
Right. And well, in this case, when you look at the ag economy and the downturn it's taken, it didn't just start here in 2025.
Right.
This has its
COVID.
roots back in 2023,
Exactly.
and
Yeah.
it's been building since then. The
Yep.
tariffs are exacerbating the problem, but
Yep.
they didn't create the
Right.
problems that we're seeing right now. And that's one of the reasons why I always remind folks that if you think back, actually, Congress passed some economic aid to agriculture back last December. Those ECAP payments that, some of our farmers might remember from earlier in the year, that was due to the downturn we saw in the ag economy before we were ever talking about tariffs. So in this case, like I say, the roots of this problem, they go back deeper than the tariffs. The tariffs just kind of pile on top of the problems that we have right now.
Right. Um, so let's shift gears a little bit. We kind of hit the hot topic first. From what we're seeing with yields, I kind of want to get your perspective too. It's another piece of the puzzle, right? The productivity and the production side of it. So I want to hit on that for a minute. You were asking before we started recording what we're seeing for corn yields. It looks to me like there's a big chunk of Iowa that got rust way more severe than what people ever thought it was going to be, which is impacting yields. And I think, the government shut down right now, so hopefully that fires back up so we can kind of get a little bit better handle on where the yield might be in the next report. But it looks to me like corn is more disappointing in a lot of areas than what people anticipated, and the soybeans are maybe as good as anticipated. What are you hearing or what are you seeing with regard to that?
Well, I was gonna say what you just said there is a good summary of what I've been hearing. I think for the most part, I do hear of a few really good corn yields, but for the most part,
Right.
yeah, I'm hearing that rust shaved off more of that yield than we had first hoped there, and that was one of the things I know I was expecting to see with the October report that we were going to get. Because if you think about this shutdown, and I'm going to take us back to the shutdown, it has a direct impact here on our expectations for yield. Because if we think about it, USDA gives us a monthly report, that crop production report, that gives us an updated snapshot on where we think yields are. And as part of that here in October, they actually do their objective yield survey where they go out into the fields and actually see those ears and can see the impact of rust within them. Well, the shutdown hit them right in the middle of that observation period. So
Hmm.
we're not going to get that data. We're not going to get that feedback. And so we're going to be flying blind here for a while as far as getting official numbers from USDA on what they're seeing. Now, we'll still hear, in this case, I've talked to a lot of folks and we're trying to figure out how we can cobble together private estimates to try to get at just how big the problem is. But it is a challenge right now, especially given that the last numbers USDA gave us, the September report, had started to show a little bit of a slippage in that yield that they were estimating. But I think many of us were expecting to see a bigger shift down in that number because of rust here in the Western Corn Belt and the flash drought that had been happening in the Eastern Corn Belt. Both of those things shaving those yield numbers down, especially for corn.
Hmm. Yeah, it's interesting. I think, like you said, it just feels like the market, if there isn't a government report, and like you said, they're right in the middle of trying to, get the data they need to get as accurate as you can. And I think, well, I guess the question I have for you is, if we're flying blind, do you think the independent reports are going to be sufficient, and the market's just going to trade what it's going to trade, isn't it? I mean, either way.
Well, I think what we found, and I'm basing this off of when you go back and look at previous shutdowns that we've had where we've missed reports, I would say the market ends up by showing a little more volatility during those times. And
Hmm.
what it tends to do is it trades the rumor, if you will. But then if that rumor doesn't get confirmed by additional reports, then we float back up to where we had been. And so when you look at the in the long run, what tends to happen during a shutdown is we tend to just sort of tread water,
Hmm.
waiting for the shutdown to end and the official data to start back up again in order to make a big move.
Hmm. Yeah. Okay. Let's shift another gear to a different gear. As far as, looking at where the market's at now, and guys are, some of the areas guys are going to still have more grain to sell than they have room for, and I think people are finding that out on soybeans. One of my partners just sent me a picture. He was driving somewhere, and there's a huge grain pile of corn already. And then you've got, the operations in the north that probably a lot of them aren't even harvesting yet. When you get up into North Dakota and some of those pockets, any ideas or any suggestions on just some practical applications on that yet? Because basis is kind of all over the place. It's horrible as you go north, obviously, especially on the soybean side. But any comments on there, or just things that guys need to be cognizant of or managing?
Well, that's the deal. I look at this time of years. It's those times where if you don't have to market,
Hmm.
you want to hold off because we know seasonally this is that low, price time of year because of the supply pressures we've got here. But if I've got to make a move, I would say I'm looking for as you say, look for those basis opportunities that are out there. What's a little bit better than what you're seeing on average that you can take advantage of? And it's also a matter of thinking forward as well as are there tools that I can use in my marketing toolbox, whether it would be futures options, forward contracting, to try to get myself set up with a little better price or at least some upside potential if I have to market some of these bushels here at harvest time.
Y-
You mentioned the grain's already piling up. That's the deal. I think first and foremost, most farmers, their first thought is if prices are low, I'm going to use storage as that first mechanism to try to give myself a window of opportunity for prices to improve. But with such a large crop possibly coming down the line, we've got to explore more avenues than just that. And so,
Mhm.
like I say, taking advantage of basis when it's favorable to you, taking advantage of, are there options opportunities out there? Are there forward contracting opportunities that you can grab a hold of today to help give yourself a better pricing opportunity
Mhm.
as we move forward?
Yeah, the challenge we see is just we always talk about capture and carry, and if you're using the grain bins correctly, that's what you need to do is actually
Hmm.
sell that carry. But, and I always go back to the cost to carry. We look at where interest rates are at. You look at how much money is currently borrowed by a lot of producers. Um, at least in our client base, we're seeing significantly more money borrowed than we did even 2 years ago. And so, paying that line of credit down some does have value. And it's driving me to a question, and it's not a recommendation, but you talked about using some of the tools, like maybe a call option, or in some cases, reownership. Not That's not for everybody, but there's some people, that can completely understand that and understand that, it's very similar to putting it in the bin. It's just that you have the money
Hmm.
to the point you do, you've set your floor and you can open the top side. You are at risk to the downside. um, how much threat do you think there is to the downside? And it's not, again, not a recommendation, and I don't want to throw you under the bus, but as we look forward in the corn yields, let's say we do shake out at a 183, 184 ish number. Do you see that as a positive, or do you think that we still would maybe have some downside, or do you see us staying sideways and a little higher? I mean, what's your crystal ball, and not holding you to it, but just a little perspective from you there?
Well, I tell you that you mentioned the critical number for me, 183 to 184 range on the yield, because I believe that's what the market is pricing in right now.
Right.
So if that's what the market's pricing in right now, we should tread water at that level. I'm more concerned looking at the usage side of the equation. So I'll go back to, the last piece of data USDA gave us on their way out the door was the grain stocks number. And we did see that we had a little more corn left over than we expected. And when you look at what happened there, or what the piece was missing there, we saw that USDA had to cut the feed and residual number down. So we're not seeing quite as much move domestically as we had first expected there. I'm looking to see, can we see that bounce back a little bit this year? And can we maintain the export flow that at least we've started the marketing year out with? Because if we can do that, that means, yeah, we should tread water, but if those demand aspects move in the right direction, we could start to pull up again here. Demand usage, you look at the estimates USDA left us with, they're at that record levels. We're talking about using over 16 billion bushels of corn this year. If we can keep that pace up, that is, to me, long run supportive of the corn market and corn prices getting back to, let's call it, more seasonal patterns where, yep, when I looked, we're in the 420s now. We could see that build up as we move through the wintertime into spring, but it takes as long as the demand can grow with us.
Hmm. So another transition here. Let's talk 26 for a minute. Fertilizer is very expensive along with everything else, but fertilizer is one of the pain points as we think about crop rotations for 26 and that type of thing. And we look at these opportunities. How aggressive would you be, or do you think producers need to be with regard to and probably not soybeans as much, but maybe soybeans, I mean, um, do you think guys need to be looking at that, or what's your thoughts? And I mean, kind of throwing you a whole bunch of stuff on 26, but what are you thinking on 26?
That's all right. I would say when you're looking at what the markets are saying, the markets are definitely, I'd say, still favoring corn over soy. when you look at just prices alone. You brought up the big sticking point, though. Fertilizer is a big concern here. So it really becomes this question as to which one, if you will, scares you more. The high fertilizer cost you know you're facing right now, or the continued uncertainty and possible destruction. I shouldn't say well, yeah, I'll go with destruction because right now we've lost the Chinese soybean market. It's gone.
Mm-hmm.
Hopefully it could come back, but the weakness you're seeing in those soybean usage numbers puts you where you're kind of again caught between the rock and the hard place. You're either going to pay up front for corn to get that fertilized to make sure you grow the crop, or do you take the uncertainty of shifting to soybeans? Yes, you're avoiding some of those higher fertilizer costs, but you may be putting yourself in a lower return market because we're missing a good piece of demand right now.
Mm-hmm.
So, like I say, when I'm looking at the numbers myself, it tends to lean more corn, even with, the higher fertilizer costs being put in place here, because that demand structure is much more solid right now in the corn market than it is for soybeans.
Yeah, and I think there's the perspective of what people are thinking is interesting because I think there's people that are kind of wishing they could plant a few more beans, but then they, like you said, you look at the margin opportunity and it's like, I just, it's
Yep.
so this, I think, stay tuned on the crop rotation decision making because it's going to get interesting, I think, as we become more informed and kind of see how things are shaking out. But
Well, and the other thing I'm really interested in as well is looking at, you know, sort of let's go out there and let's soil test. What is it you actually need on the fertilizer side? One of the ways to play this game is to say, can we mine some nutrients this year to get by, try to keep costs down, but still maintain that crop productivity? I always like to remind folks, you don't want to cut costs, you want to control them.
mhm,
If we need to spend the money to make money, spend it.
mhm.
And in the case of fertilizer, that is often the case. Yeah, it is high priced, but if it's bringing that revenue back to you, then it's well worth that price.
Right. Yeah. It's kind of like the fungicide applications this
Mhm.
year. A lot of the fields that did not get fungicide application gave up 50 bushel or so, and I got some reports on second application of fungicide just today from Wagon from our guys here, and they were looking at a 20 bushel advantage just to the second application of, of fungicide. So
That covers, yeah, that covers a good bill,
yeah, it does.
even at these lower prices.
Yeah, it certainly does. So it's just hard to spend money at the end of the year when lines of credit are almost full, and you're like, we've always overdone one, and now we got to do two.
Yeah.
That's
Well, and I
tough
think that's
decision.
the other big thing. People wonder about, why does the ag economy feel worse this time around than previous downturns? And you just brought it up there. The idea is that we're having to go into a little bit more leverage than we've had to in quite some time. And that's an uncomfortable feeling when you are adding that, additional line of credit or you're expanding that line of credit, maybe having to even, use a piece of ground that you've owned outright now as collateral
Hmm.
to get that loan structure in place.
Yeah, and that's what we're seeing. And you're 100% right on because it's getting serious, but it's a little different than it was, pre-COVID too. Though I mean, we were dealing with 3.5% interest. Now we're dealing with eight and a
Yes.
half percent interest, and even if we drop, half a point or three-quarters of a point, it's still significantly higher than it was with more borrowed, and so
Yep.
that just adds to it. But any
That's
final things that you would like to leave the producers with as we continue into harvest and finish up for some and get started for others? Any
Well, that's the deal. I think as we look here, as we've talked about, we're going to be, running with less information than we'd care for a while here. But that doesn't necessarily change how you should look at some things. I mean, the markets are still open. We're still going to be reacting to the prices we see there. So if we do see an opportunity that makes sense financially, grab it and go. It's not that you need a government report to tell you that's a good price if it fits you. And this is where I often, with my students, I tell them, it's nice to know all these things that we get to know about, what's happening in the national setup or what's happening in the global economy. But in the end, what really matters is that price you're seeing at the local elevator, and is that enough to cover your cost or not? And
Yep.
anytime I can get a price that covers my cost, that's a good day. That's a good
Yeah.
move to make,
Yeah.
regardless of what that other information tells you.
It's time to hit some singles, I think. And if you get a double, you might be doing really good.
Oh, if you're to get a double in this market, yeah, you're feeling
Yeah,
great.
exactly. So, hey, Chad, this has been a great conversation as usual. I sincerely appreciate it, and we'll definitely be getting you back. We get a little towards the end of harvest and get a little bit smarter and kind of see what the government decides to do or not to do and how that impacts things positively or negatively, whatever. Everybody's going to look at it differently, but I think we just got to all stay informed and try to get good perspective. So, really appreciate your perspective and your time today, Chad. Thank you.
It's my pleasure to be with you. And I'll put it this way. I hope harvest continues to improve for you as you go out there because while the market doesn't necessarily need more bushels, every farmer always needs more bushels.
Fastest way to lower the cost of production on the farm.
Yeah.
Yes, for sure. So, hey, again, thanks a lot. And also to all the producers out there, get your rest and be safe and take care of yourself. Make sure you get home at night and have a safe harvest. And with that said, we'll catch you again next time on the AgView Pitch.